In this video, I'm going to explain to you how you can make money with credit cards. So I just want to quickly say, disclaimer, I am not a financial advisor. This is for informational purposes only. However, I have done all of these methods I'm about to explain to you, and they all work as long as you're in control and you know what you're doing. So without further ado, let me explain how this works. If you're anything like me, I expect you were brought up, or even now, there are lots of people out there telling you, pay your credit card debt off. Credit cards are bad. Well, they're only bad if you use them wrong, like anything in life. If you use them correctly, they're an incredible tool to build wealth with. So, here is the first way you can make money with using credit cards. So you take your credit card, okay, and it's something called cash back on purchases. Really simple, straightforward. So there's certain credit cards out there which will give you a percentage cash back on whatever you spend if you use that credit card for shopping instead of, say, paying with a debit card or cash. Now, I made this mistake for years and years and years. I didn't even have a credit card. But if you get a cash back credit card and you go shopping, you use your credit card for the purchases, and then at the end of the month, this is really, really important, you have to make sure that you pay your balance off in full for that credit card, because the amount of money that the credit card company will give you is relatively small, so maybe 0.5 or 1% on your purchases. Now, that might not sound like a lot, but over a year, if you're going to spend that money anyway, it's essentially free money, and they put that money into your bank account. So there is a really straightforward. You simply go out, you get a credit card that gives you cash back on your purchases. So that's number one. It's not a lot, but it's something. Second way, a 0% money transfer. Now this is a different type of credit card. You can find them on Google. Obviously, everything I'm saying here is mainly for the UK market. It may apply where you are, I'm not sure. I know America do certain types of these credit cards, but I'm not 100% sure. You'll have to find out. This is purely for the UK, but it may apply in your country as well. So 0% money transfers. You get a credit card with an introductory offer. So that will be something like you pay 0% on the balance of your credit card for a set period of time. So that might be, let's say, 18 months. Okay, so you pay nothing. Let's say you got a £5,000 credit card limit and you do a money transfer for £4,000. They'll never let you take the full amount. So for £4,000, and they will take that money off your credit card and transfer it straight into your bank account. Simple as that. You've then got £4,000 credit balance on this card. Now, what's the difference between these two is, apart from the fact that this is going straight into your account and this you're paying with as you go, this one you must pay off the balance in full every month with the money that you would have otherwise spent on the shopping. So don't go out and buy more than you can afford. Okay, carry on spending as normal, just put on a credit card. With this one, you transfer the maximum that the balance will let you, but you don't pay off the balance in full every month. You pay off the minimum. So that's a big difference. You have to pay off the minimum, because if you don't, the offer of the 0% on the balance generally is void, and then they start charging them the interest rate on the credit card, which is usually really high. Another thing to say about this as well, they will mostly, not always, sometimes you can get good deals and incredible deals, but the 0% money transfer is for the balance. But to transfer this money into your bank account, they charge you usually something like 2 or 3% fee. But that's okay, because we're not going to keep this money in our bank account. Okay, I'm going to explain later on what we do with this money, but you will pay a small fee to transfer off this card. So right, that's two of the different cards you can get. The third is similar to the 0% money transfer. It's kind of like the top two combined. It's 0% on purchases. So what this does is similar to the top one. You go out, you go shopping, you use your credit card, and instead of the money going from the credit card as a percentage, you then use your money to pay it straight into your account, completely separate to this credit card. Okay, so what you're essentially doing here is that you're building up a balance like this one on the credit card, whereas this one you're paying off in full. This one you're going to start increasing the credit. You still, similar to the middle one, you have to pay off the minimum. So with these two, you have to pay off the minimum. The top one, you pay off everything. So all your money is then in the bank account. Obviously, you've spent a lot less because everything you're buying is going on this credit card to build up the balance, and your money is sat in a bank account. So it's kind of, they're all kind of similar, but they're allowing you to take money off of credit cards. And the fourth way is a different type of credit card, but this is something that you would do later on in the process. So let's say you've done, you don't have to do all these one at a time as well. You can do some of these side by side, or you might be getting cash back on purchases, and then on another credit card you have to, you might have that money sat in your bank account. So what you're doing is you're building up a big pot in your bank account, but you have to keep track of the different credit cards you've got and the different offers. So with the 0% purchases, it'd be similar to the 0% money transfer. You'll have it for a certain period of time, let's say 18 months. Everything you buy on that credit card, they will charge you 0% interest. Now, the good thing about this, just before I go on to the fourth one, is that not only are you getting 0% interest on the balance, you actually don't pay the 1 or 2 or 3% fee to transfer in. It's just that this one's a little slower in that one to get all the, well, it's your monthly income essentially is what you're building up in your bank account. But the other good thing is that the inflation, which it will be different in every country at different periods of time, but inflation means that in 18 months when you pay this balance off, your money, when I show you what you do with it over here, will have increased in value, and you'll actually be paying it off less. That's just a little added bonus. Okay, so the fourth thing is 0% balance transfer. Now with this one, so you've already got your balance, your credit limit on one of these credit cards, and what you're going to do is you're going to take out another credit card, and you're going to transfer this balance. So if you had the £5,000 that you'd move from here to here, you would now move this £4,000 balance onto your new credit card with the 0% balance transfer offer on this. And again, it would be for 18 months or 2 years or whatever the length of the term is. These two will have small fees to move the money. These two do not, but it takes longer for the money to appear in your bank account. Okay, so that's the 4 different types of credit cards and ways you can get money into your bank account. So you've made money off them, but obviously that's just money what is borrowed and you will have to pay back at some point. So you have to be very careful before we move on with what you're doing on each one, okay? And make sure you're meeting either the minimum payments or you're paying it all off in full, and make sure at the end of the term on this one and this one that the full balance is going to be paid back to the credit card. So at the end of the 18 months, this money has to move back from here onto this credit card, otherwise you start paying huge amounts of interest. So how do we do that, and how are we going to make money? All this money is sat in this bank account at the moment. You don't go out and spend it on more shopping or holidays or anything like that. What you do is, and this is the key to this, is that you take all this money and you invest it in assets. So what are assets? Okay, now depending on multiple factors like your level of risk, what you're willing to make what sort of return you want, you have a number of options available to you. So I'm only going to go through about 5 in this video. There are more, and I'll show you where you can find out more about investing in assets later on. So, 1, you can leave it in a bank account. Now, I'm not talking about this bank account like your checking or your current account. You will put it into a high interest savings account. This is known as stoozing. It can be difficult if the interest rates are low, like they currently are in the UK, because you won't be earning a huge amount. So really, you need to earn more than for this one and this one, whatever the fee was that you paid to move it into this account. So if you paid 2% on £4,000, that's £80. You have to make at least that £80 back before you start making money on it. So historically, you used to be able to put it in 5% bank accounts. I mentioned you were making 5% on the sum of money. So if it was £4,000, that would be £200 per year. So if it was a 2-year offer, you pay 2% to move it. So let's say it was £4,000, that'd be £80, and you'd be making £200 a year on it. So minus the £80, making £120 first year and £200 second, that's £320 for not doing a lot really. But like I said, at the moment, it's very hard to find high interest savings account. Another option you've got is you could put it in a premium bonds, but I don't think the return on that is all that high either. I think it's about 1.25%. Second option, you can put it in peer-to-peer. This is a much higher return, usually around 10%. However, peer-to-peer is a little more risky, and what you must not do, the golden rule of all of this, is you must not lose this money, because this money has to go back to pay your balance off. Even if you're doing this, you have to, you're just delaying paying it off with the balance transfer. But at some point, you're going to have to take this money back out of the asset and pay it back to the credit card. Okay, so peer-to-peer is an option. Third, the stock market. Now, again, it's massively risky. You have to know what you're doing. And the stock market does produce annualized rate of about 10% as well, I think. But that's over a long period of time. Fourth is property. You can, and I'm not saying you should, and a lot of mortgage companies don't, but you can actually use it as a deposit on a house if you have a high enough limit on these credit cards. And the fifth is invest in a business. Now, this could also be, even something like, buying yourself a suit to go to a business meeting, if it gets you a deal or a new client. So, that's 5 kind of examples of you're using money which you have borrowed, and you're going to invest in something which is going to make you a greater return in the future. There are more assets that on our website. The tag is there. I'll put the link in the description, and that is it in a nutshell. So like I say, there's a few things to remember, and that is you must always keep this money, pay the full balance back at the end of the term. If you borrow more, you make more, as long as you're not risking it. And be aware of it affecting your credit rating. That's just something I will say, because if you have lots of credit cards with large balances on, then your credit rating, or I think it's the FICO score in America, will take a hit, because it looks like you're borrowing a lot of money, which you are, but the banks don't know that you're planning on paying it back at the end of the term. I mean, that's why they offer these, is so that, because most people don't pay the full balance back by the end of the term. Just another little tip, keep notching your credit limits up on these credit cards. So once these offers expire, you keep the credit card, because in the future they generally offer you further 0% deals. So keep it locked away in a drawer, don't spend on it, and take a new credit card out every few months, or whenever don't take loads out at once, because it will affect your credit rating. And only do this if you can control your spending. Don't get carried away and end up buying a car or holiday, because these things are liabilities and they will cost you money. Anyway, I hope you found all of this useful. I know it's a lot of information to take in. You can always watch this video again, and I'll put the link in the description with this information on our website. And please like this video and subscribe for more money making tips brought to you by make-cash.biz, the site which brings you lots of ways to make money online and offline. Thanks very much.